What's good, YouTube? If you don't know, it's your boy Charles Enoch, and you're watching another Invest in Myself episode. So we're gonna start off with the intro. Okay, so today we'll be going over a simplified scenario on how to pay off your car quickly with little interest. And we'll be using two credit cards as our velocity banking debt weapon. So before we even dive in and get to the whiteboard, I'm gonna ask you to go ahead and smash the like button for me. Go ahead and make that thing turn blue. Also, if you're new to the channel or haven't subscribed to the channel, go ahead, take a little time, hit that subscribe button down below. It only takes about 2 seconds. Y'all quit being lazy. Nah, but I really do appreciate it. It does help your boy reach a higher audience base. All right, and one last thing. I am getting a lot of form submissions on my website, and unfortunately I'm unable to see those for some odd reason. I have to get that fixed. But if you are trying to get in contact with me, hit up my email down below, and I'll be sure to try to get back with you. All right, so I got the whiteboard in the back, so let's get down to business. Let's go. All right, so I got the whiteboard up. You already know how we do. We get straight down to business here. So let's look at the scenario here. We have an individual, their income's gonna be $4,000 every month. Their expenses are gonna be $3,450, which means their cash flow, the money left over, is $550 that they have every month. Now, this individual, they got a car loan for $20,000. They don't have the highest of credit, so their interest rate on that car loan is 10%, 60-month loan, and it's going to be $450 per month. Now, if this individual just paid the minimum payments, they would have a total of $5,496 of interest after those 60 months were done. So what we're pretty much going to be doing here, this individual is going to be utilizing two of his credit cards to pay off the car loan and then pay back his credit cards. So let's take a look at the credit cards here. So credit card 1 has $10,500. Credit card 2 has also $10,500. Now, both of the credit cards are offering a balance transfer of 0% for 18 months. Now, there is a 3% transfer fee. So we're going to be using both of these cards to pay off the loan, and then we're going to pay back the credit cards, which we have 18 months of 0% interest. So we're going to hop on to the other side and take a look in 4 simple steps how this individual is going to pay this off. All right, so let's take a look at step 1. So step 1, we're going to use both balance transfers to pay off the car loan. So some people may not know how balance transfer works here. So pretty much there's 2 ways that you can do it. They'll send out those convenience checks, and you would write a check to yourself and you would deposit that into the bank, and then you would get that money. The other way that the banks are doing it, you can actually give them a call up if you have a bank account with them, let's say Bank of America or whatnot. They can actually just transfer the money on there, and then the debt will be on the credit card. So either way, you're using the credit card and making it into cash, and then you would pay off the car loan basically. So we're going to use the balance transfers to pay off the car loan. So balance number 1 on the card, let's say that we took out $10,000. Remember, there is a 3% transfer fee. So the balance on credit card 1 would be $10,300. Also, the balance on credit card 2, we're going to take out another $10,000 to equal that $20,000 for the car loan. So the balance transfer fee is 3%, so that's going to be $10,300. So in total, we have a debt of $20,600 on both of our cards. Now, since we have paid off the car loan, what this does is it's going to free up $450 cash flow, because that's what the car payment was $450. So now our expenses are only $3,000. So when we go to step 2, we're going to use the new cash flow of $1,000 to pay off the credit cards. And we're going to use $500 on one of the credit cards and $500 on the other credit card. So your extra cash flow, just put 5 on one card, 5 on the other card. That would pretty much pay off the minimum payment that you have to make every month. And remember, we have 18 months of 0% interest. All right, so after the 18 months, your balance should be $18,000, $9,000 on each card. All right, so now we're gonna go to step 3. So, and this actually should be month. So month 19, we would use $2,000 of our income, of our $4,000, and we're gonna put $1,000 on each of the cards. Now remember, the cards had $9,000 on them, so we're gonna put $1,000 on the cards to pretty much pay them off. All right, so once each card is paid off in full, we'll use $2,000 of our extra income, of the rest of the income of $4,000, to pay off majority of our expenses. Now, we're going to use card 1 to pay off $1,000 for the remaining expenses, because our expenses are $3,000 and we use $2,000. So just on card 1, we're going to pay that to pay off the remaining expenses. All right, step 4. For month 20, we're going to use $1,000 of our income and we're going to put it onto credit card 1. Remember, we have to use $1,000 of credit card 1 to pay the expenses. So now we're going to put that $1,000 onto it and pay it off in full. So now that we have to use $1,000 over $4,000 of income, we would have $3,000 left. This will take care of all of our expenses. So we're going to pay the rest of our expenses using our actual income. So now that we have both credit cards paid off in 20 months, remember this is supposed to be months, my apologies. So in 20 months, we have paid off both of the credit cards, and the total interest that we paid was $600. And the $600 came from the balance transfer fees. So in 20 months, we paid $600 in interest and we paid off the card. Remember, the car loan was $20,000, 10% interest rate, and they would have paid it off in 60 months or 5 years. And the total interest would have been close to $5,500. So we saved a lot of money and a lot of time, pretty much using the velocity banking method, taking advantage of our debt weapons and the offers that a lot of these cards give you with the balance transfers. All right, so I hope these 4 simple steps helped you out in regards to learning the velocity banking strategy and even how to pay off our car loan in half the time. And again, if this video was helpful, definitely go ahead, smash that like button for me. If you are new to the channel or have not subscribed yet, take time, hit that subscribe button for me. It really does help me out and it helps me reach a higher audience base. And like always, you guys have a good week. Peace out.